Ladies and gentlemen, welcome back. This is Christopher Aaron. It is March 3rd, 2026. We're going to have a gold alert about the Iran war. The United States and Israel have just attacked Iran a few days ago. The escalations are still building. Iran has retaliated against Israel and many countries in the Middle East. We're going to talk about this with respect to the war. The most important thing to realize is that these types of geopolitical events can be short-term deflationary because a lot of investors will panic and sell their asset classes. And when enough investors sell, let's say, their stocks or their bonds, it causes margin calls on other investors. And so oftentimes an asset class like gold will be sort of sucked into the selling in the initial deflationary wave because investors are getting margin calls on their other assets and they have to sell sometimes assets that are higher to pay the margin calls on their other asset classes. So it's important to remember that. Long term, however, war, I hate to say it, but war is the single most inflationary activity that human beings engage in. Why? Because it's a double destruction. If there's one lesson that I take from my time in Iraq and Afghanistan back in 2006 and 2009, it's that war is a double destruction. War takes the product of human labor on one side of the conflict and it goes into an activity that gets blown to smithereens. So it doesn't produce any benefit. It doesn't create any net benefit for society as a whole. It gets blown to smithereens. And then to make matters worse, not only that, but you take the products of that, the bombs, the missiles, the rockets, and then you blow up other people's labor on the other side of the planet. And so war is the only activity that human beings engage in, which is a double destruction. It's a destruction. It's a lack of productivity on the initial side, and it's a destruction on the far side. It's a double destruction. So please remember, over the long run, war is the most inflationary activity that human beings engage in. Every major war, when we study this throughout history, whether we go back to the U.S. Civil War, in which the price of silver tripled and the price of gold nearly doubled during the U.S. Civil War. Why was that? Because war is highly inflationary. When we look at the after effects of the Vietnam War or the wars in Afghanistan or Iraq, all of these wars highly inflationary and ultimately beneficial for precious metals prices. I wish the wars didn't have to happen, but given the world that we live in and politicians that want wars to happen, we have to do the best that we can do, which is to protect ourselves and to make sure that we thrive even amidst the chaos and amidst the war. So that is what we're going to do here on this channel. I'm glad that you are here. Make sure to hit the subscribe button so that you don't miss these videos when they come out in the future. The bell icon would also help you to be notified. If you have 1 second to give it a thumbs up, I very much appreciate it. It does help out the algorithm here on YouTube. Last but not least, certain weeks, I don't have a chance to post on YouTube, but I do post quicker free updates on X or Twitter, as it used to be known, at iGlobalGold for those free updates. Okay, let's look at the gold price. What I want to do, first of all, is focus on the short run. Here's the short-term chart, just going back to the beginning of this year. And what we can notice here is that the initial reaction, the war broke out on Friday night. The initial reaction was for gold to go higher, right? Because we know ultimately war is inflationary. But then what happened? Gold has succumbed to selling pressure over the last 2 days as what? A lot of traders around the world are basically conditioned. It's like a Pavlovian response. They're conditioned when there's chaos in the world. Hey, just sell everything. That creates margin calls. That forces people to sell gold. That drives investors into the US dollar because if you're selling your other assets, where do you go? You park it in the US dollar as a consequence. And we're seeing the effects here on gold over the short run. Now, over the very short run, I want to say that we can see a very clear former resistance here at the 5,090 level. Notice this resistance from early February. This resistance again from mid-February. Broken right here, February 20th. And then what? Notice that that level acted as support as we got into the last week of February. So this level right here, 5,090, is a key short-term pivot level for gold. And what I think is going to happen here over the next couple of weeks is it's simply going to be a question of, do enough traders show up at the 5,090 level to allow this to continue to act as support in this kind of manner, in which case I think gold is going to be clawing its way back toward all-time highs and likely making new all-time highs when we get into late March, early April. That's if enough traders can show up here at 5,090. And we really have like an if-then statement. You know, it's like in computer programming. If enough traders show up here at 5,090, then we get this reaction. Or if those short-term traders that are getting liquidated and that are irrationally selling their gold amidst what? The most inflationary type of outcome you could possibly ask for, a major war breaking out. If enough traders get liquidated, then unfortunately we are likely to see this type of scenario over the short run, in which gold comes back to the next key support level, which is going to be 4,400. And you can very clearly see here the major low that was set end of January, early February after this little mini panic. 4,400, and you can see that acted as support here back in January, former resistance. So if enough traders get washed out of this market for irrationally selling their gold due to margin calls, then that's the reaction that we are going to get. And then I suspect after that, gold will form a significant double bottom, and we will power our way higher and be making new all-time highs as we get into the middle part of this year. So this is one of those moments where I fully say I do not have the crystal ball. What I have is a very clear roadmap here that shows that 5,090 is the major pivot point for gold, and we simply have to wait to see, are there enough traders that get liquidated here over the short run to cause a double bottom? Or do enough traders and let's say legitimate long-term buyers actually step into this market to say 5,090, this is going to continue to hold, okay? So this is what we have for gold over the short run. It's an if-then statement depending on how the market evolves. I want to remind you, though, however, about gold over the long run. And this was the major point from my talk in Vancouver, Canada, last month at the VRIC, in which I gave a 20-minute presentation about this chart here. This is the Dow to gold ratio going back from 1897 through the present, almost 130 years, right? And if you're not familiar with this ratio analysis, you just have to remember the higher that this goes, the better that the Dow is doing. The lower that this goes, the better that gold is doing. And what have we seen here just in the last several months? Look at it. You can see this. This is the fourth turning. The fourth turning, what? Lower in favor of gold that has happened over the last 130 years. And so, I mean, this has just occurred. You've got to realize where we are in this cycle. Gold is just starting to outpace mainstream assets, including stocks. And by the way, the Dow is going to be completely synonymous with the S&P 500 because they track with about a 98% positive correlation. The Dow gives us a longer history to go back to versus the S&P 500, so they're functionally the same. And we see here that this is the major fourth turning in which the gold price is going to start performing better than the general stock markets or the Dow. And remember, if we take the average of the previous 3 cycles, and these are the only 3 cycles, there are no other cycles to refer to in the freely traded market data. I am not cherry picking the data here. This is it. This is all of the information. If we average out all of the previous 3 turnings of this cycle of the Dow to gold ratio, it gets us to a target of $22,000 per ounce for gold based on where the Dow is today. This might be hard to believe. You might say I'm crazy, but I'm telling you, this is how these cycles have played out every time in the past when you average them out and you just look at what has actually happened throughout history. Whether we're talking about the Great Depression, whether we're talking about the inflationary 1960s and 70s following the Vietnam War, whether you're talking about the post-NASDAQ bubble, right? This would be the average. And yes, it is possible for this to result in a lower gold price than this if the Dow itself were to come down. But either way, it will result in the same net increase in purchasing power for gold compared to the Dow. So what you have to remember is that even though we've just looked at the short term, which is basically a coin toss, it's do enough buyers show up at that 5,090 level to hold that support, or do they fail? Do they get margin liquidated, right? In which case gold comes back to 4,400 or so. That's the short run. If you don't have enough gold, I would absolutely, and this applies to silver, of course, as well. If you don't have enough gold and silver, I would absolutely use that type of sell-off to do more buying, because the long-term analysis tells us that gold is going much, much higher than it is today based on this signal, the 4th turning of this Dow to gold ratio. And so we have to remember that no matter what happens over the short run. If you like the kind of analysis that you've seen here today, you have to realize that you're only seeing the very surface level of it. In our service called Precious Metals Intelligence Plus, we cover not only physical gold once every several weeks, like we do here, we cover it every single week in Precious Metals Intelligence Plus. If anything changes with this analysis, our members learn about it first through flash updates. We also cover the physical silver market every single week. Just as you have seen here in this type of analysis, we include silver every single week. We also include the gold and silver mining sector. We also include Bitcoin, the U.S. stock market, the currency markets, and other commodities such as oil. We'll be talking about oil in our premium update this week. This all goes right to your inbox via flash updates and weekly videos if you join us in our flagship Precious Metals Intelligence Plus service. If you're a serious investor, I mean, you really have to take a hard look at where you are. You're getting just a fraction of the total analysis today. You cannot afford to be without the full updates if you're a serious precious metals investor. If you're a higher net worth investor, you have to understand the power of the private placements. In our service called Elite Private Placements, we are buying gold and silver mining company shares because they are leveraged to the underlying metals. But we're buying those shares at a discount compared to the open market. So we start with a profit off the bat, which you don't get if you buy the shares in the open market. And then you get even more upside because we're getting free warrants. Yes, free warrants on every single investment that we make. And so if you can invest the minimum, which is 10,000 Canadian dollars or about 7,000 US dollars, you're going to get a lot more upside in your gold and silver shares compared to buying those shares in the open market. Remember that. Elite private placements. We're making a killing right now in all of our investments, and this might not last for much longer. If you would like to work with myself, Christopher Aaron, one-on-one, you can reach me on the consultations tab of our website at igoldadvisor.com. Just know that I do not take any fees or kickbacks whatsoever from any of the mining companies, any of the bullion dealerships. I am 100% independent. And the reason for that is so that I can help individuals such as yourself to navigate these markets from an unbiased perspective. Guys, you have to be so careful about where you're getting your research here and your analysis, because most of the places that you might be getting analysis from, they're probably selling the precious metals, or they probably are taking kickbacks from some of the mining companies to promote the mining companies. I do not do that. I have a different business model than most. For this reason, I thought that there would be a niche in this market to help people from an independent perspective to understand what's actually going on. And that is the basis of iGold Advisor. I hope that you will join us in whichever way is the best for you. Precious Metals Intelligence Plus is our flagship research service. Elite Private Placements gets you more upside if you're a higher net worth investor. And no matter what level you're at, I can work with you individually via consultation. I have helped hundreds of investors from around the world to change their lives over the last 5 years. And I look forward to helping you as well. Thank you for tuning in.